Hi, everybody. This is Andrew Perlin, and thank you for being here for another edition of Insurance Explained. So, listen, I know the market's going a little crazy right now. There's a lot of uncertainty in the world, and people just aren't sure. I'm not here to talk about market and where to invest your money and things like that. But the one thing that people tend to talk about over and over again is market crashes, right? Losing 20 or 30% of your portfolio, especially as you get older and you're getting close to retirement. You're just like, what am I supposed to do about this? But there is a risk that can cost you far more than a market crash. And almost no one talks about it. If the market does drop, you still have time. You can adjust, you can recover. The market usually bounces back and you'll make that money back and then some if you have enough time to do it. You can always get another job or get a job if you're retired or make more money or whatever. There's ways to get over and overcome the market crash. However, if your income stops, everything changes immediately, right? Your bills don't stop, your mortgage doesn't stop, life keeps moving, but if the paycheck's not there, you have a problem. And that's the risk that most people don't really talk about. So my goal today is to explain to you what you can do to protect yourself in the event that you lose the most important asset to your entire livelihood, your family, and everything, and that is your income. Not terribly long ago, a client of mine unfortunately became disabled. They were skiing, had a really bad accident, and the next thing you know, he was out of work for a while. Now, he's a younger man. He's in his early 40s, so he still has plenty of time to go as far as his retirement is concerned, but he couldn't work. And because he couldn't work, everything just stopped. He needed to recover. He was out of work for almost a year. It was a pretty bad thing. Luckily for him, he had disability insurance. We were having this conversation when he was probably in his late 30s. And we were just talking about what happens if you lose your income. Like what happens? Now, if you lose your job, okay, you get another job. Okay, I get it. You get downsized. It's an issue. I understand that too. But if you are disabled, if you can't work, no one's going to give you a job. They're just not because you got to be able to do the work. Now, I understand in the post-COVID world that we live in, you can get a lot of working from home. If you can find that job, great. And they're out there. He couldn't do that, right? He had to be laying in bed. He couldn't do anything. He just couldn't sit. It was hurting too much. And it took him about a year to get back to normal. Now, he made very good money and he had money saved up. So it wasn't the end of the world for him. But that money, he went through that probably in about 3 months. That was his rainy day fund. So he had another 9 months to go of no income. Thank God he had disability insurance. It paid him about 70% of his income on a tax-free basis. And he was able to use that to pay the bills, keep food on the table, keep his mortgage going until he got back to work. Okay. That's what this does. And that's what most people don't seem to understand. They're looking at disability insurance. Well, I got to use it only in the event. Well, hey, guess what? That's typically where insurance comes into play. Only in the event, right? People get disabled all the time. Now, do I have a better chance of dying before I hit 65 or getting disabled before I hit 65? You have a higher chance of becoming disabled before you stop working. So you can self-insure everything if you have enough money. This gentleman, although very successful in his own right, did not have enough money to self-insure with no income for a year. His wife worked. They needed his income to make ends meet. And that's where this policy came into play. When he was going through all of this, never once did he say to me, wow, man, I've got way too much disability insurance. I don't know what I'm going to do with all this. No, I never heard that from him. But what I did hear from him several times was, man, I wish I could have gotten more disability insurance. I wish there was more money there so I can continue with my savings and continue with my retirement planning and things like that. So in a nutshell, disability insurance is not designed to make you better. It's designed to get you through. No insurance company is going to put you on a policy that is better than it is if you're working. That's the whole point. They want you back to work. But at the same time, what you're looking at here is trying to get through the tough part while you are convalescing, because if you can't work, you can't bring in an income. This is a huge gap that most people miss. And I'm really talking to the young professionals out there who are making a lot of money and they're living the lifestyle and they're just not protecting that one piece of income. If I lose my job, no problem, I'll get another one. But if you can't work, no one's going to hire you, right? So you have to be able to protect yourself from that point of view. The best part about disability insurance is it's not terribly expensive. If you're protecting $10,000 or $12,000 or whatever a month in income, it's a very small premium to pay. Now, obviously, if you don't use it, okay, then you lose it. But if you need it and then there's not enough or you don't have it at all, that could be a huge gap. And I'm here to tell you, if your income stops, that's worse than a market crash. It just is, because you can lose an awful lot of money in a really short period of time. And that is hard to recoup. If you can't protect your income, then there is an issue that could potentially cost you hundreds of thousands of dollars, not just the salary that you're not earning in the year that you're disabled, but what that money can do for you, the time value of money, how that money that's saved is going to grow. So not only are you not making money, you're not paying your bills, so all that debt is growing, but you're also not saving money, and all that money that you're not saving isn't growing either. So it's a huge issue. And yes, losing 20, 30% of your portfolio due to a down market, that's awful. The market bounces back. It always does. Okay. Not having that infusion of money because you're disabled is going to be an issue because it's hard to recoup that. It just is. So I'm asking everybody to take a look at this. Most employers offer group short-term disability, which is going to cover you for about 13 to 26 weeks. But if your disability goes beyond 26 weeks, there's a good chance you're going to be disabled for a while. Most companies don't offer group long-term disability. Some bigger companies do offer long-term disability. It usually covers about 50 or 60% of your pre-tax number. And that benefit to you is taxable, just like income, because the employer most likely is subsidizing it to a certain extent. That's a pretty big gap. So there's going to be room there to put on an individual policy just for you that will cover the gap. Now, again, insurance companies don't overinsure anything. So there's a threshold to what you can qualify for based on age and income. But just because you have it at work doesn't necessarily mean that you're completely covered. So talk to a professional and find out, what are my limits? What can I buy? What can I do on top of what the employer is already giving me? I'm working with a client right now, and they have very good group insurance on the short-term disability side, and she's got a decent amount of money coming in on long-term, except it's taxed, and it's 60% of her annual salary. So she's getting basically half her salary. She's clearly living on more than half her salary. There's a big gap there. So the policy that we're putting in, we're using Mass Mutual in this particular situation, very good disability product, by the way. So now she's fully covered to the extent that she can be. If something happens, her short-term disability will kick in. Most employers offer that as a group benefit, but not every employer offers long-term disability as an individual or group benefit. But if they do, again, chances are it's taxed, and it's about 50 or 60% of your annual income. So there's going to be a delta there. Personal, individual disability insurance will sit on top of that. Policy will be smaller, premium will be smaller, but it's going to cover what your employer doesn't. And that little bit, whether it's $4,000, $5,000 a month, whatever, could be the difference in paying your bills or accumulating a lot of debt. And if these disabilities last longer than normal, it could be worse than a market crash. It flat out can be worse than a market crash. Okay. It could be worse than your house depreciating. It could be worse than everything, because without your income, everything stops. If you have disability insurance, good for you. If your income has changed, you should review it. If you don't have individual disability insurance, I definitely think you need to talk to a professional and find out what your options are and how much that's going to cost and how much income that's going to replace. Because again, if your income stops, everything stops. All right. So it's another quick episode this week, but I appreciate you being here. Please like and share the channel below so we can grow. That's how we meet more people and try to help people make proper insurance decisions. If you have any questions about disability insurance and how you can protect your income, please leave a comment in the bottom there, and I'll get back to you. This is Andrew Perlin with Insurance Explained, and have a great day, everybody.